Hello everyone, good morning and a very warm welcome to our webinar today on paternity pay in Sage 50 Payroll. My name's Duncan, I am one of your presenters and I am joined today by my colleague Alice, who will be co-presenting, and also Paddy, who's standing by in the background, ready and waiting for your questions. Let's now take a look at what we're going to cover in the webinar. So I'm going to start things off by taking you through a brief introduction to statutory paternity pay, the legislation and the eligibility. And then I'm going to hand over to Alice, who's going to run through a demo of recording paternity details in Sage 50 Payroll. She's then going to show you how to check the SPP amount and also how to make adjustments to your employees' payments, either using the Make Up Basic option or by doing manual adjustments. I'll then come back and explain how you reclaim statutory payments at the end of each tax month. And I have a few troubleshooting tips just to finish with to let you know about some of the more common issues that people come across when dealing with paternity pay. And then we're going to try and stick around at the end to give you the chance to ask any final questions and for you to have a read through the Q&A and get those slides downloaded. So that's our plan. Let's get straight on to our introduction, introducing statutory paternity pay. So what is SPP? Well, it stands for statutory paternity pay, and it's a payment that employers make to eligible employees if they and their partner are having a baby, adopting a child, or having a baby through a surrogacy arrangement. So this is the payment made to the partner of either the mother or the main adopter. Now, the entitlement is either 1 or 2 weeks of SPP, and it is paid at a weekly rate of £172.48 per week. That's for the 2023 to 24 tax year, or 90% of average weekly earnings, whichever is lower. Now, that rate will increase in the new tax year, and as soon as you've installed your year-end update, which will be released sometime next month, you'll have all the legislation in place for that change to happen automatically. Now let's have a quick look at the eligibility. So to qualify for this payment, employees must be employed by you up to the date the child is born or placed with an adopter. They need to be on your payroll earning at least £123 per week in an 8-week relevant period. And that's usually the 8 weeks leading up to the qualifying week, which we'll talk about on the next slide. They need to give you the correct notice. They need to be taking time off to look after the child or their partner. They need to be responsible for the child's upbringing and have been continuously employed by you for at least 26 weeks up to any day in the qualifying week. You can read more about the eligibility and what to do if an employee isn't eligible on the gov.uk website, which we've linked to at the bottom of this handout. So I'd just like to run through some of the key dates to bring this to life a little bit, and we're going to count back from the due date of the baby, also known as expected week of confinement. So counting back 15 weeks takes you to the qualifying week. That's 15 weeks before the due date. And then back a further 26 weeks takes you to the latest start date for an employee in order to qualify for SPP in the case of a birth. The 8-week period where average weekly earnings are calculated is the 8 weeks leading up to and including the qualifying week. And the earliest date that statutory paternity pay can begin is the date the baby is born. So if the employee is planning to take time off before the baby's birth, they would need to take annual leave, as the SPP can't kick in until the date of birth. Now, currently, there is an 8-week period in which they need to take this leave, starting from the date the baby is born. So leave must finish by 56 days from the birth, and that is in place for the rest of this tax year and has been the case for many years. But there are changes to SPP legislation coming into effect from the 6th of April, which I will briefly run through in the webinar today, although we will provide more detail on the changes coming in our year-end webinars, which will be starting in March. So quick look at these changes, bit of a preview for you. So with effect from the 6th of April, so in relation to babies that are due from the 6th of April or later, paternity leave and pay will be able to be taken within the first 52 weeks following the birth or placement. So that's increasing from that 8-week period I've just mentioned. The leave can be taken as either a single block of 2 weeks or 2 blocks of 1 week. So 1 week blocks can be taken with a gap in between from the 6th of April. And employees will need to give 28 days notice before the date they intend to take each period of leave. So they don't need to confirm the date straight away if they're planning to take that leave later on within the first year of birth or adoption. So something to keep in mind, but for any baby that is due before the 6th of April, the current rules apply. And that's what we're going to assume for all the examples we're going to give you today. Now, before I hand over to Alice, I just want to quickly explain about reclaiming statutory payments. So any statutory parental payment can be reclaimed from the government, and most employers will be able to reclaim 92% of the statutory pay paid out. If you qualify for small employers relief, though, you can claim 103% of the statutory parental payment. So it's 100% of the payment and 3% known as NI compensation. You'd usually qualify for small employers relief if your total Class 1 national insurance contributions were £45,000 or less in the tax year before the qualifying or matching week. And the reason we're bringing this up now is that you need to check this setting before you process any statutory parental payment to ensure that you're reclaiming the correct percentage for your circumstances. So it's the same rule for maternity, adoption, shared parental, and parental bereavement. So I'm going to quickly show you how to check your total Class 1 national insurance for a previous tax year, and also where to find that small employers relief setting. So if you're at the webinar on Tuesday, it's the same steps that we showed you there, but just as a recap, first thing I'm going to do is check the total national insurance for a previous tax year. And the easiest way to do this is to go to your payroll tasks and to set your process date back to the last day of the previous tax year. So that would be the 5th of April, in my case, for 2023. And once you've set your date back into that year, simply need to run the P32 report, which you can find from these payroll links here on the left-hand side, or from the main reports option. And instead of running it for a single month, which is what you'd usually do at the end of the month, we're going to run it for the full year by entering 1 and 12 in the criteria values. And then when I click OK, you'll see the P32 report, and it's box 4 that you're looking at. Make a note of this figure. So mine is £37,085.73. And as that is £45,000 or less, that indicates that I do qualify for small employers relief in the following tax year. So having checked that, I'm going to set my process date back into the current tax year. So I'm just going to put it to my last pay date. And the setting for small employers relief can be found if you click Company here at the bottom left corner, and then Settings. And on the Details tab, it's this checkbox at the top. So I just need to ensure that I have ticked the box to say that I am eligible for small employers relief. And if you're not eligible, you can come in and check that that box is not ticked. So I'll click OK to save those changes, and I'm now set up to reclaim the correct amount. And you'll see exactly how that works towards the end of the webinar. So that's about it from me for now. I'm now going to hand over to my colleague Alice, and she's going to take us through recording paternity details. So over to you, Alice.
Thank you very much, Duncan, and good morning, everyone. So moving on to recording paternity pay, there's a few main things you're going to need for this, starting with the date your employee wants to start their paternity leave. You're also going to need a declaration, which includes the baby's due date. This can be the SC3 form, or if you've got your own, you can also use that. And you're going to need the date the baby was born, which, as Duncan mentioned, is the earliest date the statutory paternity pay can begin. Once these dates and some more details are in the programme, it's going to automatically calculate that amount of SPP due in the current period and all in line with current legislation as well. So let's just jump into payroll and I'll show you how to record that SPP. So much like with maternity pay, there's a few options of how to record SPP in the programme. I'm going to show you how to do it via quick SPP, but I will also show you the other way so you can just decide which way you would prefer to use. So employee number 2 is the person going on statutory paternity pay. And I'm going to go to payroll links and I can see recording paternity. You can also find this by going to the employee tasks. You can click on recording paternity. And this will pull up the quick SPP window. First things first, we're going to tick that we've received that declaration. So we've got the SC3 form from the employee with the declaration. And the expected date of birth is the 10th of February. So we'll pop that in. And as you can see, this window is really nice. Everything is all in one place. And it does also give you the option to print off a summary as well, which I'll show you a little bit later on. But now that we've inputted this, we'll click on check entitlement. And the payroll is essentially running some little background checks to see if this employee fits these qualifying conditions. So the evidence is received. They have worked long enough, so their start date was before the 26 weeks prior to the qualifying week. And they have earned enough as well. So they've earned an average of at least £123 a week in the 8-week period leading up to the qualifying week. And speaking of average earnings, if we look just below this, we can see the payroll's calculated the average earnings at £461.54. If we were curious how it's worked that out, if you just click on earnings during set period in the bottom left, we can see that during these periods here, this employee's had 2 monthly payments of £2,000, and those payments are what the payroll's used across this period here to calculate this average earnings. If I had a weekly employee, for example, this would look a little bit different. You'd have some more figures in these boxes, but ultimately doing the same thing to get to that average earnings. So we'll click OK. And based on this due date of the 10th of Feb, there are some more key dates here on the right-hand side, just in case you needed them. And now the SPP won't actually calculate until you've entered a last day of work. So I'm going to enter this now, which was it's going to be the 14th of Feb. So I'll put that in. And as soon as I click tab on my keyboard, we can now see that the entitlement is calculating, and it's calculating 2 weeks at the standard rate of £172.48. Now, the reason it's just assuming and showing that full entitlement is because we've not actually entered a return to work date just yet. So it's assuming this employee wants to take that full entitlement, which in my case they do. But if they wanted to only take 1 week, I can click on this little calendar. And with the paternity pay starting on the 15th, I can say, well, if they wanted 1 week, I'd select 1. And you can see that change there in the entitlement table. Now, my employee does want to take the full 2 weeks. I'm just going to change that back to the 29th. And we can see that change applying there. And last thing really is just the actual date of birth, which for this employee is the 14th. Go. The last thing really with recording SPP is just special circumstances. So if there are any special circumstances, such as the employee, because of a trade dispute, for example, you can go in here and add that number there, but there isn't in this case. So I'm just going to click OK and save these changes. Now I mentioned you can print a summary of this report. So once you're happy with all of the information in here, if you click print, it's going to come up with a lovely little summary for you, which I'll show you. It looks something like this. So for Mr. Employee number 2, we can see a summary of those qualifying conditions, the average earnings which have been calculated, those key dates, and the entitlement due as well. So I'm going to click save and close out of here. And that's how to record paternity pay through the quick SPP window. Now, I did mention there's another way to enter SPP, and that's actually in the employee record. So we'll double click and go into there. And I'm going to click on absence. And at the bottom, you'll notice you've got those statutory options there. We're going to click on SPP. So since we already have recorded it, there's already dates and things in here, but if we hadn't, it's just the same information in a slightly different layout, and would pop in those dates, tick that the declaration's been received, and we've got that auto calculation there. And if we just look in the 8 weeks gross tab as well, we can also see confirmation of that qualifying week, as well as those payments which have been used to calculate this 8 weeks average earnings for the employee. Last tab in here, the entitlement tab, again we can see that qualifying week, and we can see that entitlement which the payroll has worked out, so 2 weeks at £172.48. But I'll just draw your attention to this table at the top as well. So currently it's just full of zeros. This is normally where the payroll would show what's currently due in the period, but it's not calculating anything just yet. And that's because the paternity pay starts on the 15th for this employee. But if you follow my mouse just down to the bottom of the screen, you can see my process date's actually still only set to the 31st of January. So as far as the payroll is concerned, that paternity pay has not started just yet. But let's change that and I'll show you it calculating. And it's just a reminder to retain that declaration as well. So let's save the record. And what I'm going to do, I'm going to go to the payroll tasks and just change my process date to my next pay date, which will be the 29th of February. So now if I go into enter payments for this employee via the payroll tasks, I've got the salary there as normal, which I'll come back to in a moment. But if I go to the summary tab, I can now see that for statutory paternity pay, there's that full 2 weeks calculating. I'm happy with that figure. I know that's the 2 weeks of paternity pay. But if I did want a bit more clarification on how it's got to that figure, if you see this little arrow, we'll click on this, select the paternity type, and it brings you straight to the record with that paternity pay information. So if I click on entitlement, I can see that now I've changed my process date. It is calculating that currently due, so in the current period and up to the process date, there's 2 weeks of paternity pay calculating at an amount of £344.96. And this is a great window as well if you're troubleshooting anything to do with paternity pay or maternity, if that's the case. And Duncan will go over this a little bit later with you with some scenarios for troubleshooting. So let's save that. And I'm happy that that's calculating. So we'll come out of enter payments for now. And I'm just going to recap over what we just went over with recording paternity pay. So first of all, we looked at the quick SPP window where everything was all in one place. You enter the dates and details, and you can print off a summary of those details as well in the bottom left. And I also showed you whereabouts in the record that you could input the paternity pay. Same information, just a slightly different layout. And then what I did was change my process date to my next pay date for that paternity pay to calculate. And we checked and enter payments to see that amount there. And if I was curious how it was getting to that amount, I can click on the little arrow, select my paternity type, and go to the entitlement tab to see how many weeks are getting paid. So that's the statutory amount taken care of. But I just want to dive a little bit into adjusting your employee's pay. Before I do go into this though, just bear in mind it is very company specific. It does depend on the contract you've got with your employee, as well as any company policies that you might have in place. And of course, if you've got a certain way of adjusting payments already, which works for yourself, then absolutely continue with that. But in this section, I'm just going to show you a few more common scenarios for adjusting pay. You might either pay the employee's usual wage by topping up the SPP, or you might just pay them that statutory amount. So we'll go back to payroll and I'll show you a couple of those examples, starting with makeup basic. So scenario number 1 is for makeup basic. So we'll go back to enter payments. And if my company policy wants me to top up that paternity pay to their full wage, I can do that absolutely fine. You can see their full wage at the moment, £2,000. And if we go to summary, we can also see that amount of paternity. So whereas they would normally get £2,000 a month, the payroll's currently adding on top of that the paternity pay. So my company policy says pay them full wage, but this at the moment is too much. So it's adding them both together. What Makeup Basic does is it'll reduce this salary here to take into consideration this paternity pay. So it'll make up their full wage with both of these instead. So let's click on Makeup Basic and I'll just show you what that's going to do. First thing you want to do is just check you've got the full wage check you've got something calculating for the statutory payment, and then click on Make Up Basic. So it says you've selected to make up to basic the statutory payment for this employee. To do this, the hours or number value of salary, which is just the name of my pay element, will need to be reduced. Do you want to continue? And yes, we do. And straight away, you'll notice that gross pay is now reduced to their normal salary amount. And if we go back to payments, it's done this by reducing the hours or number value of the salary pay element, which ultimately has reduced the salary to £1,655.04. So now if we go back to summary, you can see they're getting that reduced salary, and when we add that to the paternity pay, it's equaling their normal full wage. So they're getting their full pay as per my company policy, and it's made up of paternity pay and a top up of salary too. So that's Make Up Basic for scenario number 1, where you are topping up the statutory amount with salary to make it up to their full wage. But moving on to scenario number 2, so if you don't have a company paternity policy, you might just pay that statutory amount, which is absolutely fine. So in this example, my employee left for paternity on the 14th, with the paternity starting on the 15th, but obviously that's halfway through the month, so they've actually worked 10 days before they went on paternity leave. So I want to work out how much salary this employee gets for those 10 days before the paternity pay kicks in. One option I've got to work out their pay this way is called a manual adjustment. So I'm just going to set this back to the full wage for now for this example. And so yeah, as I mentioned, they've worked 10 days, but this wage here is for a total of 21 working days in February for this employee. Do bear in mind though, that can change from one employee to the other based on their working pattern or days. And I can use this payment screen to calculate how much this employee is going to get before that SPP kicks in. So make sure their full wage is there. And I'm going to click on this little calculator in the hours or number box. And I'm going to say they've worked 10 days out of the full 21 in February. I'm going to click equals and click tab. And as you can see, it's looked at their full salary for 21 days, and it's worked out that for 10 of those, it's going to be £952.40. So if we look back on summary, we can see they're getting paid for those 10 days worked, but once the paternity pay kicks in, that's all they're going to be getting. You can also use a manual adjustment for different scenarios too. So if you've got a leaver, for example, who's left 10 days into the month, you can work out how much they're getting paid for those 10 days, very much in the same way, just use that little calculator. So that's a manual adjustment for scenario number 2, where you only pay the statutory amount, but you do need to calculate how much salary they're going to be getting before they go on that parental leave. And I'm happy with those figures in here. I'm happy with how much I'm paying this employee. There's just one last adjustment that I want to make, and that's to the employer's pension. Usually, the employer is required to keep up with their regular contribution for the employee. Mine would normally be £44.40, but because of my manual adjustment and because the salary's been reduced, so have my pension contributions. So what I need to do is actually adjust and override this pension contribution to make it that regular amount. But I would recommend, if you're unsure about this, or if you're not sure what I'm talking about, do check with your pension provider to see if this applies to your company. You might save yourself some time if it doesn't apply to yourself. But if you have checked and it does apply, what you can do is overwrite that contribution by going to the employee record. So I can use this little shortcut here. I can go to pensions and manage schemes. And if I just click edit on that scheme, you'll see we've got these contributions at the bottom. So these contributions do only change it for the individual employee. Even if you've got somebody on the same scheme, what you're doing here will only change this employee. So we're going to change the employer contribution from a percentage in 3% to a fixed amount. And I'm going to change that to my regular contribution, which is £44.40. I'm going to click OK, save the record. And I'm going to go back to summary just to make sure that change has been applied. So if I click on employers again, I can see I've successfully adjusted that to the regular contribution of £44.40. Do bear in mind though, once the statutory payment has ended, you will have to go back into the record just to change that back to your normal contribution again. So in my case, once the paternity pay is over, I'll go back in the record, change that back to a percentage and 3%. So that's me kind of done for enter payments. Everything's good for this. And for the sake of this webinar, I'm just going to say that everyone else's payments are okay too. And what I can now do is just continue with my payroll as normal. So I'm going to move on to pre-update reports. And there's a couple I want to show you just so you can see how that parental payment shows on there. All of these are just standard reports that are in the payroll. So I'm going to click on laser 2 per A4 sheet and we'll just preview that. Wait for that to load up. And I'm just going to make it a little bit bigger. And it's employee number 2 that we need here. So we can clearly see that normal salary of 2,000, but because we've done that manual adjustment and we've worked it out for 10 days, we can see that reduced salary. And just at the bottom, nice and clearly, we can see that line for the parental payment of the statutory paternity pay, which is £344.96. So I'm happy with that figure. It's pulling through as I'm expecting. And I'm just going to show you as well the payment summary part 1, which in general is just a really good report to run before you update the records. Got a nice summary of a lot of different figures you may need to reconcile. And it does also show the parental payment on there too. So I'll make this a little bit bigger. And remember, it's employee number 2 we're looking at. And if we just go along, we can see that reduced salary again. And in the parental payment column, we can see that figure for the full 2 weeks of paternity pay there. So we'll come out of the pre-update reports. And I'm just going to go ahead and update my records as normal. I would always advise taking a backup before you update the records. And whenever you're prompted to in payroll, really, it's always a good idea just to have a backup of that information, just in case you need it. So we'll go through and do that backup. Should be nice and quick. And I'm just going to update the records. Perfect. Last updated date's spot on now. Last thing for me is going to be the full payment submission. So I'll click on that. We'll submit this as normal. It's going to include the normal kind of payments, deductions, your total liability as well. And just ignore this window. It's just because I'm in the training room. But you'll see this total liability figure. Now, because we're actually reclaiming some of those statutory payments, we will be doing another submission to tell HMRC that we're reclaiming it, and therefore the payments due to HMRC will be reduced. But Duncan will be going over that very shortly with you. So for now, we'll just submit the FPS as normal. Perfect. And I'm just going to pop back to the slides and go over a little bit of what we did there with adjusting your employees' payments. So we first looked at Makeup Basic for scenario 1, where my company policy required me to actually top up that paternity pay to their full wage. We then looked at adjusting your payments manually. So if an employee, still worked 10 days before they went on paternity pay, I could use that and work out how much of the salary would be for 10 days. And again, you can use that scenario if you've got leavers or something different, for example, like sick pay as well. That also works. And then lastly, once I'd checked with my pension provider that this did apply to myself, I could actually override the pension and make that pension adjustment so that the employer contribution was correct for me. But now that we've done our pay run, we're happy with everything so far. I've submitted my FPS. It's going to be a case of reclaiming those statutory payments. And for this, I'll pass you back to the lovely Duncan. It's over to you.
Thank you very much, Alice. Okay, so we're going to finish things off by covering reclaiming the statutory payment at the end of the month. And then I've got a little section on troubleshooting as well. So a few things to watch out for and how to avoid potential pitfalls. So in terms of reclaiming the statutory payments, I explained earlier that all employers can reclaim at least 92% of the parental payments that they pay out. And if you qualify for that small employees relief, you get 103%, including the NIC compensation. And the way that you get that money back is at the end of each month, when you make your payment to HMRC, the amount you reclaim is deducted from the amount due. And the P32 report in payroll will do that calculation for you So you'll see the amount that you actually need to pay over, taking into consideration what you've reclaimed. However, that information about the reclaim isn't included in the full payment submission. So you do need to do an additional submission at the end of the month, known as an employer payment summary, or EPS, so that HMRC are aware of how much you've reclaimed. So let me take you through these steps. So I'm actually going to be reclaiming some parental pay in January. So I've got until the 19th of February to do this. And I've paid out some paternity pay in January. So first thing I'm going to do is to run the P32 report for that month. It was tax month 10. So I could either use that quick link from the link section to run the P32 report here, or you can find it in reports. I've added it to my favorites, form P32, but it's actually found within the period end folder. So employer payment record. So when the criteria values come up, just making sure it's the right tax month 10 for January. And then if we take a closer look at this on screen, you'll see here in boxes 8 and 9, I've got the amount of SPP I've recovered. And as a small employer, I'm also getting the NIC compensation. So this total is 103% of the amount that was paid out. Looking further down the report, we can see that that is actually deducted from my liability. So the total amount due is lower than what was submitted in the FPS. And that is the reason why we need to submit an EPS at the end of the month. So the EPS is a monthly submission. Even if you run your payroll weekly, fortnightly, or 4-weekly, you wait until your payment is due to HMRC before you send this over. So I can print this out for my records. I know how much I need to pay. And when it comes to submitting, again, there's a quick link for the employer payment summary from your payroll tasks, or alternatively, you can go to e-submissions and you can click employer payment summary just here. So the reason you're sending an EPS is that you're adjusting your payment as you are recovering statutory pay. The next step tells you the tax month the submission relates to. In this case, it's month 10. And then the next screen shows the amounts of parental pay that you have reclaimed for the tax year to date. So January was the first time this year that I have recovered a statutory payment. And if I have any other statutory payments this tax year, the next time I do an EPS, it will show the year-to-date values for any of the relevant categories. So this is what I'm reclaiming. I'd click onto next. It has a box to enter CIS deductions where applicable. And then the next step is where apprenticeship levy values are calculated for those larger businesses. And to complete the wizard, I would click onto finish. And that then takes us into the submission. So you can ignore this warning. You won't see this. This is just because I'm in the training room. It takes us into the employer payment summary screen, where I'd click continue. You check your details and click submit. And then you get a summary of the submission, very high level. And then to send it to HMRC, you simply click submit. So you would see the progress bar move across. And once that submission has been successful, you get this confirmation screen where you can view a submission log. And if I close out of this screen, I have now reported the reclaim amounts up to and including tax month 10. So HMRC can then work out the actual amount that I need to pay, which will then tie up with what was due on the P32. So that's how the reclaim works. If you have paid out a statutory parental payment earlier in the year and you forgot to do an EPS, you can simply send one in the next available period. So next time you come to make a payment, because it will always report the year-to-date values of what you have reclaimed. So to finish, we're going to take a quick look at troubleshooting. So we know that one of the most common reasons people get into or experience issues with statutory parental payments is where it's been paid in the past for a previous child. So one thing to watch out for is if an employee has had SPP before, there is some information that is stored within that employee's year-to-date values, and that needs to be reset in order to correctly calculate the entitlement for the next child. So specifically, it's the weeks paid of SPP, which lives in the year-to-date values, and that's always retained just in case there's ever a paternity period that spans more than one tax year. Now, there's two ways of clearing the previous information. There's a manual way where you can go into the year-to-date values and you can reset the weeks paid value. Or if you use the recording paternity screen that Alice showed you earlier, you will see a prompt that comes up if there are already details entered for paternity leave. Now, do be cautious with this prompt, because if you're in the middle of paying a statutory payment, you don't want to clear that information by clicking yes. You would want to retain it and just view the details. So whenever you see that, get into the habit of clicking no, just to see what's there already. And then if you are setting up for a brand new child, you can click yes, and that will clear out the information. So I just want to very quickly show you how that works in the demo. So I'm just going to set my date to my next pay date, 29th of February. And I'm going to set up some paternity leave for an employee who has been off on paternity leave before. So I've selected them here in the list, and I'm going to use the link for recording paternity. And you'll see that I am seeing the prompt. I've already paid SPP to this employee. Do I want to record details for a second child? So if in any doubt, always click no to view what's there already. And I can see actually, yeah, this is old information from 2017. Last time they were off on paternity leave. Now, because this information is present, if I just show you in the employee record, from the employment tab, I can go into the year-to-date values, and then within statutory payments, I've got 2 weeks of SPP paid. And what that means is if I just went into the absence section, and I just went into SPP and amended the dates, so maybe we're going to put the due date in for February this year, we'll put a born on date, we can put an ended work date and a return to work date, calculate the average earnings and check the entitlement. We can see that an entitlement is calculated, but there's nothing currently due. And the reason is we still have weeks stored for the previous time the employee was off. So usually this problem kind of presents itself when you're checking the payment. You've entered all the details, you did it in the employee record, you go to check the paternity pay and there's nothing showing. And upon investigating that, by drilling down and checking the entitlement, this is the reason. So your two choices is either to remove that figure manually from the year-to-date values. Remember that was on the employment tab in the employee record. Or alternatively, set it up via recording paternity. And this time, because we're sure we want to clear the previous information, we would click yes. And then when we do pop the dates back in, we've got our 2-week entitlement. And then when I go back into enter payments, you can see it is now calculating the paternity pay. So that had automatically cleared the year-to-date value, which I could have cleared manually just by overwriting this figure here. So a really common problem for people to come across, and a couple of ways there for you to avoid it or to work around it. Just briefly then, some other troubleshooting tips. If there is no SPP calculating, other reasons may be that the average earnings are too low. So I'd recommend you go into the quick SPP screen, check what the average earnings are and how they've been calculated, or you might have it set up as manual statutory pay calculations. So there's a checkbox for this in the employee record, but if you try to view the information in quick SPP, it will alert you if that box is selected. One other potential issue you might come across is where you've entered some dates and you're expecting 2 weeks of statutory paternity pay, but only 1 week is calculated. And that is almost always because there are less than 14 days between the start of paternity pay period and the return to work dates. So double check the dates you've entered. Keep in mind the last day of work is the day before the paternity leave begins. So there needs to be a clear 14 days between that date and the return to work date in order to qualify. So I've got an example of this one as well. If I just select one of my employees and go to recording paternity, got similar dates to what I just entered in the previous demo, but we've got the last day of work being the 1st of Feb, return to work being the 15th of Feb. It's only calculating 1 week. And the reason for that is technically between the 2nd of February and the 14th, which are the dates of the leave, according to this information, there are only 13 days. So in this case, it's quite a common one. The actual last day of work should have been the 31st of January. And you can see there it has then increased the entitlement to the 2 weeks. But as we know from April, those 2 weeks can be taken as separate blocks. So it will be set up slightly differently in the new year, but we will be covering that in our year-end webinars, which will be starting in March, so next month. So that's about it for the presentation, and we are nearly out of time, but we are going to keep answering your questions in case there are any that we need to pick up there at the end. If you do think of a question after you leave us today, just to point you in the direction of some useful resources, we have an online help centre at sage.co.uk/help, or via any of the help options that you find in Sage 50 Payroll. So from there, you can search our knowledge base, you can read support guides, you can check out the upcoming webinars by following the webinars link at the top, and you've got all the options to get in touch with our support team. So really handy resource available 24/7, as well as Sage University at sageu.com. You can create a completely free profile at sageu.com, find your way to the Sage 50 Payroll learning path, and you can then find e-learning courses, online certification, and bite-sized learning on a number of payroll topics. So do check it out if you haven't already. So with that said, on behalf of myself and Alice, thanks so much for joining us today. Enjoy the rest of your week. Have a great weekend, and we look forward to seeing you on some other webinars in the not too distant future. So goodbye for now.